The world is not going to reglobalize. Big dip, but discussion is not end of war. And end of war is not even end of war now. On top of that, whatever is decided in a discussion, well, we have to ease afterwards. So that's supportive of gold. If this is met with the correct policy choices, and by that I mean without a ceasefire, right? It's bullish gold, it's bullish silver, and it's bullish stocks because it's inflation. If this is met with bad policy choices, it's bullish gold, bearish stocks, bearish bonds, and the US dollar. That's the Great Depression thing. Monetary solutions are bullish gold. So if we lower rates, gold goes up or stops going down, and maybe stocks might stabilize a little bit.
According to Bloomberg, investors believe there is nearly a 40% chance that the Federal Reserve will cut interest rates by 25 basis points as early as next week, ahead of its meeting on May 7th. This expectation is driven by newly announced tariffs by former President Donald Trump, which could increase inflation while slowing economic growth. Fed Chair Jerome Powell has taken a cautious tone, noting that while inflation may rise and growth is slowing, there's no rush for immediate action. It feels like we have time, he stated, emphasizing the need for careful monitoring of the economic situation. In the broader financial market, gold continues to benefit from this uncertainty. Veteran market analyst Vince Lanci notes that even if geopolitical tensions ease, central banks may still pursue accommodative monetary policies, which would support gold prices. On the other hand, if tensions persist or worsen, heightened concerns about inflation could drive gold, silver, and even equities higher as investors seek shelter from economic instability. Supporting this bullish outlook, Deutsche Bank has significantly raised its average gold price forecast for both 2025 and 2026. The bank now expects gold to average $3,139 per ounce in 2025 and $3,700 in 2026, up from its previous projections of $2,725 and $2,900 respectively. These upward revisions reflect the evolving macroeconomic and geopolitical environment as well as increased demand from central banks. Notably, the People's Bank of China added gold to its reserves in March for the fifth consecutive month, reinforcing gold's role as a strategic asset in times of uncertainty. Lanci further emphasizes that while interest rate cuts tend to benefit gold by reducing the opportunity cost of holding non-yielding assets, fiscal measures such as tax cuts or targeted spending are less directly supportive of gold. Nonetheless, if monetary easing continues and inflation remains elevated, gold is likely to retain its appeal as a defensive hedge in an increasingly volatile global economy. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
What do gold and silver look like when this is over? Over in the short term. If Trump and Xi sit down to talk, that is very bearish for gold. Near fatal for leveraged longs, I would think, in the short and perhaps even the intermediate term. But long term, not fatal. Tariff ceasefire causes longs to sell some, but the world is not going to reglobalize. Big dip, but discussion is not end of war. And end of war is not even end of war now. On top of that, whatever is decided in a discussion, well, we have to ease afterwards. So that's supportive of gold. If this is met with the correct policy choices, and by that I mean without a ceasefire, it's bullish gold, it's bullish silver, and it's bullish stocks because it's inflation. If this is met with bad policy choices, it's bullish gold, bearish stocks, bearish bonds, and the US dollar. That's the Great Depression thing. Monetary solutions are bullish gold. So if we lower rates, gold goes up or stops going down, and maybe stocks might stabilize a little bit. Fiscal spending solutions are less bullish gold if they're properly targeted. We're going to spend money on tax breaks. We're going to support companies. That's not going to be supportive of gold, but it's going to rise. Gold's going to rise because people have more money again. All errors are bullish gold to varying degrees. Again, see the HeartNet walkthrough. He's got a really good report this week. All right. One thing I noticed that I left open here that I want to finish up on. There's a lot of risk out there, and we really haven't seen enough money come into gold, considering the risk. So at this point, it's not overvalued anymore. And we did an open interest analysis on that on the weekend, and it's pretty amazing how well gold has held up. The analogy, not the analogy, but the precedent I want to give you is during the great financial crisis after the Lehman moment, gold and stocks dropped. Gold dropped a couple percentage points and stocks dropped a lot. When QE started, gold rallied immediately and stocks kept dropping. Okay. So the first reaction to stimulus is bullish for gold, not for stocks. The second reaction was bullish for gold, slowing down, and then bullish for stocks. So extra money when it's printed goes into the safe haven. That's what's going on in China right now. Does this affect China's behavior? No. China's insurance companies are going to buy even more gold because their citizens are going to say, I want gold products because they're scared right now, scared about what's happening in the world.
Silver has historically shown a tendency to outperform gold during precious metals bull markets, particularly as the rally reaches its peak. This trend was evident during the pandemic years when silver surged by nearly 63% in 2020, far outpacing gold's gains. In 2025, a similar pattern is emerging. While gold reached a year-high increase of around 26% last year, silver quietly climbed by 34%, delivering higher returns. Silver is playing a dual role, serving as both a safe haven asset and a critical industrial metal, which has only added to its appeal in uncertain times. The dynamics of the silver market are shifting, particularly with strong physical buying from China. This demand is challenging the traditional paper market, with liquidity providers exploiting the widening exchange for physical spread to push the market toward physical settlement. As demand from China and India intensifies, this shift is revealing the inherent fragility of paper-based pricing mechanisms, setting the stage for a potential breakout in silver prices as the market moves further away from futures pricing. Vince Lanci highlights that silver has recently outperformed other metals, including copper leading the rally. A mix of factors, growing bullish sentiment, unexpected strong buying from China, and the unwinding of the common long gold short silver trade by funds, has contributed to this shift. With both industrial demand and safe haven demand playing key roles, silver appears poised for continued strength in 2025, reflecting a broader structural change in its market dynamics. Let's get back to the interview.
Silver also cratered, not as big as copper, but silver seemed to lead the rally higher in all the metals, in everything. And I'm going to suggest that there was a confluence of events. And one of the events was what I just said. Another contributing factor was there was heavy buying of silver in China, which I couldn't believe they'd buy silver before gold, but there was heavy buying of silver. A third factor is we have been talking for probably a year here how funds will like to sell silver and buy gold. And short-term plays, medium-term plays, but long-term, if you've been saying, oh, gold's being remonetized and silver's not, I think we're going for a recession, you're going to be long gold and short silver. I think, I want to move to this chart here. I think we saw someone with a big position unwind. Now, is it one person? No, it's not one person. But is it a situation where someone said, look at that, I was right, long gold, short silver, or half the world that's long gold puked, and the other half of the world that's short silver covered. But in any event, the gold-silver ratio just got too crazy, and some people stepped in. I want to zoom this out to a monthly to give you an idea. And I'm going to pull my levels up here. Now, this is when I was trading it before, and this is now. This is a configuration. I'm not saying the market loved my level, but I am saying that this channel matters. This is the other channel that I was working with, but it stayed in this channel, it went up. Now, what happens now? I don't know what happens now, but I do know that there's probably going to be a lot more selling of gold and buying of silver within the complex. And you can see that if you look at the other metals. All right, let's stay with gold. This is a phenomenal, wonderful day for gold, okay? Because people with margin calls sold it on the first day, and it was bought by the first dip buyers, probably some shorts buying. On the second day, margin calls completely overwhelmed it. When I say margin calls, I mean heavily leveraged funds. Hedge funds are going under now. And on the third day, on the reopen, more margin calls came in, and it was caught, right? And now we're in US hours. There will be some residual margin calls at these levels, but I don't think the market's going to do much either way until there's either news higher or news lower. But right now, if you want to speculate, go to an hourly chart by the 4-hour low from last night, by the previous 4-hour low, and stay long. Silver, I think you got to be crazy to be short now.
The evolving economic and geopolitical landscape is shaping the outlook for precious metals, with both gold and silver showing resilience amidst uncertainty. Gold continues to benefit from concerns about inflation and the possibility of central banks pursuing accommodative policies, which could support its role as a safe haven asset. Similarly, silver is benefiting from increased industrial demand and strong physical buying, particularly from China, which is shifting the market away from paper-based pricing. As both metals remain in focus for investors seeking shelter in volatile times, the prospects for sustained growth in 2025 appear promising. Given these developments, do you think precious metals, such as gold and silver, will continue to outperform traditional assets in the coming months, or will other factors alter their trajectory? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.